Hello guys and welcome to the 81st edition of the Trading Opportunities webinar. This is Nirav and let me quickly check the microphone before we proceed with the... It looks like we are live. Yes, the audio seems to be working. So guys, welcome everyone to the 81st edition and before I proceed with the webinar and everything else, let's just get done with the legalities. So the disclaimer here on the screen suggesting as always that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for a profit, loss, or loss of profit. With that being said, let me give you a very quick introduction. For those of you new here, my name is Nirav and I'm the admin and owner of 50eyes.com website as well as the YouTube channel 50eyes Market Analysis, where this webinar is currently broadcasted live and also broadcasted on our LinkedIn, right? So those of you new here should note that we do these webinars every Friday and the timing is always 2 p.m. GMT. Last week there was no webinar as I was out of station or on holidays. So I was thinking of doing one on Sunday but couldn't do one. Anyways, that's about it for the webinar. Other than this, I'm also the author of the book Think with the Markets, which you can get on Amazon Kindle edition, and been keeping a track record of all the webinars and forecasts that I do since 2016, which is when I started the webinars and YouTube videos, etc. So as you can see, the accuracy of the analysis and forecasts has remained higher than 80% consecutively for 6 years. Since 2022, we are doing these weekly webinars, so I have stopped tracking them. Previously, they were monthly. It was easier to track and keep a spreadsheet. With that being said, let's now proceed with the actual webinar. We will go over the charts of Euro USD followed by crude oil, gold, S&P's 500, Nifty 50, and in the end, we'll discuss Bitcoin and see what possible trading opportunities exist for these markets, what trade setups, and what Elliott Wave counts are there. And lastly, those who want to go and check my posts and live trades and analysis in the Slack private group, you can request details via using the contact us page, which is this 50s.com/contact us. It's a paid group and is request only. So with that being said, let's now quickly go over the charts. Hi Louis and good morning to you. So yes guys, if you are live in the webinar, make sure to say hi, hello in the chat. And also, if you have any queries, you can always push them in the live chat. So, anyways, let's now begin with our first chart, which is the chart of Euro USD. So, as you can see here on screen, we have been following this count for quite some time. I shall just put it to the left. Yeah, there it is. So, the count we are following is that this whole thing is a complex correction, W down, X up, and then a Y down. Now on the actual chart, we have the W placed over here, X is already placed over here, and Y is still continuing. Now the thing with wave Y is that it will have A, B, C inside of it, like a zigzag. Actually a zigzag, not like a zigzag. And this, by the way, is Elliott Wave terminology and Elliott Wave patterns, which I'm discussing. In case you are new here. So anyways, as I was saying, the wave Y, which is the last leg which we are talking about, will have a zigzag inside of it. So we are to see where is that. So far, what we have over here is I have marked this as the A and this as the possibly the B wave, and I'm assuming that the C wave might have more downside remaining for the completion of wave I. Now, the thing to note here is that I have a small minor position here, and the expectancy is that if the A is this much big, then we expect wave C to at least be at least 50% of this much, right? That's just the general expectancy I'm going with. So, with that in mind, I'm assuming that if this is the wave we complete here, the down leg will have wave 1, wave 2, wave 3, wave 4, and then a wave 5. So basically, long story short, we expect 1 and then 2. Two legs in the downward direction. One as a wave 3 and one as a wave 5. So since that is the expectancy, I have added a very minor short position here. Let me see if there is anything else to add here. Yes, sir. One thing is that the wave 2 is expected to stop somewhere within this white zone. You can call it a resistance zone. It is actually the 50-60% Fibonacci retracement, and it is coming currently at 1.0676. 069. So within this zone, I expect that the wave 2 will stop or perhaps even before it and then proceed in the downward direction. The minimum target that I'm expecting on this in the downward direction is this level of 1.059, let's say 595. So this is the expected target level on the downside. Of course, it can go lower and touch this trend line to the downside, of course. But 1.0595 is our sort of minimum target we are expecting on the downward direction. So that's about it for this setup. And in case you are wondering, yes, this is wave 2 progressing as an A up, B down, and a C up as a flat correction. So maybe some more upside is remaining. As I can identify the 1 of the C, 2 of the C, 3 and a 4 maybe, but the fifth is not very clear. So that's why I'm saying. With that being said, I think we have discussed all the important points on this chart. In case I'm wrong, then that will be clear only above 1.07262. If the market goes above this level, then I will have to consider that possibly its position is wrong and get out of it or book losses. And a warning sign will be if the market establishes itself above this white resistance zone. If the market does something like this, goes above it and takes support on it and propagates above it, that is, spends some time above it, then that will also be a negative sign for the short positions I'm carrying. So that was about it for the Euro USD trade. Next up, let's have a look at crude oil, where we have been able to capture multiple good trades. As a matter of fact, if I can just quickly check on CL. Yes, a lot of good trades on CL. For instance, this was a trade on, when was this? September 20th. Longs, added more longs, booked profit on longs, and added shorts. booked profit on shorts. And yeah, these are the last two trades I'm discussing. Let's have a very quick look at this one. What was this? Yeah, so I was trading a counter trend movement, zigzag in the upward direction on this one. So the trade was basically that we were waiting for the wave 5 to complete in the upward direction over here, right? So it was a very small upward move I was trading for, but then the market went sideways, giving us a sort of flat correction and allowing me to add more to the upside. And later on, it did go up and touched our targets. Right. So while the idea was initially to enter longs and then exit here, it did give us deep downward movement and then allowed us to add more longs, and I was able to average down to a good value before the market took off finally. That was one of the two trades which I took in this week. I think I took more trades on crude, but yeah. Anyways, I just wanted to give you a quick idea of how I proceed with my Slack posts. So the analysis and trades are posted live like this. And as I mentioned earlier, if you want to become a part of this group, then you can request details by visiting 50years.com/contact dash us form and writing the subject matter details for the Slack private group. Do keep in mind it's a paid group and request only. Okay, with that being discussed, now let's have a look at what's going on crude right now, which you can use in your analysis. I personally think that the situation is a little bit unclear. Let me show you why I'm thinking that. Let me delete this. So first of all, let's take this point of reference, which is the price level around 93. So from this point of reference, we expected a zigzag in the downward direction, right? And within that zigzag, thing is that the wave A. Let me just first draw a rough zigzag for you. So zigzag will have three waves. The first leg down is called an A. The up move is called the B, and the last leg down is called the C. So as you can see, the A was complete here, and if we assume the B is here, then the C being complete means this market can just go up from here, right? However, the issue I'm seeing is that this correction, in my understanding, is a little bit smaller than what I was expecting. So I'm not very interested or very keen on going long on this counter right away. Though I will look to consider if it closes above this 92 mark, I will consider the long possibilities, but I will not be taking straight out longs on it. Because the second thing which I'm thinking can happen is, let me just push this alert. Yes, the second thing that can happen is that this is just propagating as a complex. And then it will just shoot down from here. And this is just the wave B. So this is the secondary scenario which I am thinking can happen on this counter. Again, the confirmation of it is not there yet. So I'm not even short on this market. So where should I consider the selling opportunities? Below 90.3 level, I will look to consider selling this counter, right? And basically that means I'll just look at the market again and see how things are progressing. If it's progressing accordingly to the count, then I'll look to enter. So long story short, no trade on crude oil right now. It's just a wait and watch market with the upside only activation above 92.68, and downside we are just waiting and seeing if we can get a clear signal to enter shorts. With that being said, let's now head over to our next chart of gold. So far, it looks like gold is following a triangle structure, right? Now let's have a look at it in a little bit of detail. So what I'm assuming is that there are again two possibilities here. So I'll discuss both of them. So what I'm assuming is that from this point of reference, which is the price level of 2079, roughly speaking, we have the wave A complete here. And this whole thing, this sideways overlapping price action, I am assuming that it's a corrective structure propagating. Excuse me. So I'm assuming that this is a corrective structure which is currently propagating possibly as a triangle. It could also be complex. It could also be something else. But if it's a triangle, then it's most likely already complete because a triangle will have five waves inside of it, which are labeled as an A up, B down, C up, D down, and E up. So the wave E can also go above the AC trend line, which is this trend line basically. As you can see, the wave E has actually gone above the AC trend line and then seen a sharp sell off. So it is kind of the characteristic trait of a wave E to do that. So far, it is in line with our hypothesis that this market might be following a triangle structure. And if that is the case, then this will complete the wave B, which will then be followed by a down leg for a wave C. Now, as far as confirmations or what do you call entries are considered, the actual entry or the proper entry is below the BD trend line. So basically, once the market goes below this trend line, let's say something like this, then we can consider this as a good entry point. And even better or even higher probability setup is if the market goes below this trend line and then goes back and tests it again here, right? And fails to go above it. That is the best entry setup in case you are interested in waiting and seeing if that happens or not. If we get something like that, then this will be an exceptionally good trading opportunity. So that's why you can see already I have placed an alert near the BD trend line, which is currently around 1906. And I think I'll just place one alert on the trend line itself because that's what you can do here on TradingView. Less than the trend line, create. So once the market goes, as you can see, this circle appeared or this alarm symbol appeared. So that means once the market on gold goes below this trend line, I will get an alert. So that's about it for the setup on gold. As far as targets are considered, 1856 is the target to the downside, which can see much more downward movement. But I'll just discuss the minimum. And actually, I have actually worked out the other levels. It is between 1847 to 1793. So I will have to confirm or recheck them. So we'll just stick with the 1856 for now. And this is the progression. And lastly, this thing is not behaving, or basically an update to this analysis will be required if this counter crosses 1952.87. So let's just say 1953 to the upside, in which case it is not really following this triangle count and something else might be happening. So we will have to take another look at this count and see what's really going on at this point in time, or at that point in time, I should say. With that being said, we have now discussed our setup on gold. Of course, those of you who are live in the webinar can post their doubts if you have any in the chat. Next up, let's move to the chart of S&P's 500 and Let's go with the bullish count for now on S&P. So the bullish scenario on S&P is that let me squeeze this thing. So the bullish scenario is that we have completed a correction here, ABC correction at 3493 level. So this 3493 level becomes our point of reference. This is where we will do our analysis or start our analysis for the supply. From here on, we have already counted this as a wave 1 up, wave 2 down, and some alternate views were possible in this price action, but I'm just going to go and touch the more important or the most likely scenario here instead of discussing alternates. So the most likely scenario is that this is the 3 up, the 4 down, and should be followed by the 5th up, right? In which case, I have already identified that the support level or the level where the market is expected to stop and reverse is 4305, or let's just say 4306. So this is the expected level where I expect that this market can stop and reverse or even before it. Let me give you a quick big picture view of what I'm talking about here. So this is what we call an impulsive progression in the upward direction. And in an impulsive progression, there are 5 legs. For those of you not familiar with the Elliott Wave, and the 5th leg will go in the upward direction. Wave 4 will generally stop at the 38.2 level, retracement level, Fib retracement level. So that is what I was talking about when I mentioned the price level of 4306. Right. So this is where the alert is. This can of course reverse before that level as well, but generally it has a high propensity of going to the 38.2 level and then showing the reversal. So long story short, we will be waiting to see the market's price action around 4306. If we see something out of the ordinary, that is, let's just say we see something like market going below 4306 substantially to, let's say, 4200, and then sustaining below this level and then going further lower, like even below 4200, then that means something is wrong with this analysis and we will need to relook at this counter and plan accordingly. Of course, I update all my daily views on in my Slack because I trade these things. And second thing is, if things go according to plan, we will wait to see some sort of reversal within this region, 4306, few points above, few points below, let's say. If there is a reversal, then if you don't want to track it exactly here, then you can just place an alert somewhere near the upper end. For instance, around 4450, I have an alert, and if the market goes above it, then of course it has given the reversal. So at that point, I can also come in and check. But again, those are passive strategies, not really advised if you are looking for high probability setups. So to conclude this analysis, we wait for the market to go near 4306 and see how it behaves there. If it holds it and shows a sign of reversal, then we will look for longs. If it does not hold it, goes below 4200 and sustains there, that is spent some time there, then something is wrong with this analysis. And in that case, we will consider the super bearish view. Just in case you were not in the last webinar, the super bearish view is that this leg down is the wave A. This is the, let me just remove it first. This is the A, B, and C. For the B, and then we are heading down for a C wave that will be like 1, a 2, and a 3, and a 4, and a 5. It can go even lower than the, actually it should or is expected to go lower than 34, 94, 93, whatever level that is, 3490, let's say, right? So that is the super bearish view, but as I said, we don't have any evidence yet, and 4306 is the level to watch out for. Only below that we will consider this alternate possibility and not before it. So that's about it for our discussion on S&P's 500, and let's now head over to Nifty, which will be followed by Bitcoin's analysis. So Nifty, last time when we discussed it, I recall quite clearly that we were discussing a trend line. Let me just see. The last date when we did the webinar was 8th of September, and see if we still have those trend lines drawn or not. So not sure if this is the real chart which we were following in the last webinar. So I'll go with the current analysis instead of discussing past analysis. So the important thing in Nifty is this point of reference, which is the price level of 19,994, right? I did discuss very clearly that this is a strong resistance level at 19,934, as you can see with this thick line, right? Horizontal line. And the idea was that the market needs to sustain above it to establish a long-term uptrend or a new bull wave per se. Now the market did go above it and then has seen extremely strong sell-off, as you can see with these gaps and strong legs. Actually, in price action, you can even consider this strong leg as a sort of a gap. But anyways, I'll not touch those concepts. Long story short, from this point of reference, around 19,996 or whatever that is, there are two possibilities. First one being that this market is giving a up, A down, B up, and a C down correction. This will basically be a 3-3-5 scenario. A flat correction in Elliott Wave terminologies, A down, B up, and C down. The wave C will have 5 waves inside of it, which are labeled as 1 down, 2 up, 3 down, 4 up, and 5 down. So if we project this rough idea on the actual price action, we figure out that this is your A down, this is your B up, and the C down is currently under progression. Most likely, my understanding is that it has some downside remaining for the wave C's fifth. As you can see, this leg I'm talking about still remaining. So basically, we are here 3, possibly the 4 is continuing, and the 5th is remaining. That's what I'm basically saying. So we will look at it in a little bit detail. So that's the major idea once the 5th is complete. And do keep in mind the wave 5 is supposed to go lower than the low of wave 3. And lower than the low of wave 3 is already achieved. If I zoom in, I can show you. Yes, as you can see here, the wave 3 low has already been taken out by a small movement, but it's more than enough. So theoretically speaking, it is possible that the C may have completed itself, but I generally like to stick with the what I believe here is happening is that it is still in congestion for wave 4, which will give a 5 down. So long story short, this analysis is basically suggesting that whenever this fifth leg is complete, it will then start to fly up and give a new uptrend or a strong move in the other direction. Maybe not an uptrend, but at least one strong leg in the other direction, right? Now the counter view on this, again, this is my main view that this is a flat under progression. And the counter view to this is that, one second, we have already completed the correction here at the price level of 19,223. And this is the wave 1 up, sorry, yeah, 1 up, 2 down, 3 up, 4 down, 5 up, which is then being showing the completion of an impulse. Now, again, this could mean two different things. One would be that an impulse is complete, so it will give a price retracement to the 50-60 retracement level, right? The second thing it could mean is, let me draw the 50-60. That should be a noticeable level. Yeah, there it is. Yes, so as I was saying, if an impulse is complete in the other direction, two possibilities exist. One is that we are seeing an zigzag correction like this, which will go to the 50-60 box, which should have been something like this. It doesn't look anything at all as a bookish view, but most times you won't get a bookish like real life example, anyways. So that being said, the level to watch out for reversal in that case becomes 19500. This is where what we call is 1 second, 19600. Sorry about that. So level to watch out is on the downside 19600, and this is where we will expect the downward movement to complete, even if it's completing as an ABC to the downside, or if it's completing as a flat, which we just discussed as our, let's say, hypothesis one. So long story short, in both cases, we are going to consider the possibility of market holding this 19600 level. In case the market goes below it, then we start to have doubts. It could still go below it and be a wave C as a flat, as we discussed here. So, but that reduces the possibility or gives what you call strength to the bearish possibilities. So, long story short, we are looking for a bullish bias, and we would want or like to see the market hold 19600. Once it does hold that level, we will look to plan for long trading opportunities. And in generally, in case of a flat structure like which we discussed in our hypo one on the right hand side, generally the simplest strategy is to wait for the break of the wave 4 high. So basically the wait for the wave 4 high, which is around 19795. Again, this is not a hard and fast rule. I'm just giving you the generalized idea of how I would look out to plan trades on this market. Depending on the clarity of price action, we may get much better what do you call entry than this level as well. That's also possible. So 19795 generally would be a good ideal level. So I'll just place an alert over here. And on the downside, as I said, then around 19600, we will see how the market performs. If it holds, if it does not hold, what's really going on. So I'll just push a less than alert. Excuse me. So with that being said, we have discussed our trade ideas on Nifty. And lastly, before we move to our last chart of Bitcoin, I'll request you guys who are live in the webinar or watching later on as the recording to make sure to hit the like button, as that helps the YouTube algorithm determine that this content has been useful to you guys. And of course, if you are new here, then do not forget to subscribe as well. And even more important than that, if you are finding the content useful, definitely make sure you share it with your friends and colleagues, so that way we will get more reach and more of this quality content coming your way. So that's our chart on BTC. Not the clearest chart, and what I'm really thinking over here is happening is that we are possibly seeing a sideways movement, and I'm currently thinking that perhaps it's a triangle in progression. So the way I'm looking at it is this. 1 second. So this has multiple possibilities. I'm just accommodating the one which I think is likely at this point in time. There's also the possibility that the whole downward movement has already finished here. Like a flat kind of correction is finished here, A, B, C. And this was the C leg with 1, 2, 3, 4, 5 in it. And then this market will just take off from here. Right. So that's one possibility. Again, we don't have evidence for it until the market sustains below 28,100 or 28,109, roughly speaking. Then we do not have any evidence for bullishness. So as long as the market remains below this alert line at 28,100, let's say, we will not look to consider long trades. Only above it, we will consider the long trades. So as far as the short side is considered, the idea comes out that perhaps the market is going down as a WXY correction, in which case I have marked this as our W. The wave X is propagating. It is either propagating as a triangle, in which case we will see something like this, or it is propagating as a flat, in which case it is most likely complete over here. In which case we can see straight downward movement. So as I said, I'm currently biased towards the short side unless the market goes and clarifies the upside by sustaining above 28,100, 28,100. And with that being said, we have to stick with WXY correction because that's the only clear fitting structure which is supporting the bearish bias as of now. So with Bitcoin, that's about it. I don't think there is much to add here. We do have downside targets, but those are not very wide. For instance, 24,276, let's say 24,300 is our target to the downside, minimum target to the downside, which is actually not that far away if you consider the volatile nature of this contract on Bitcoin. So those are the levels to keep in mind. And with that being said, I believe we have covered all the major points on Bitcoin as well as the other charts that we discuss regularly. And again, lastly, as I would like to request you here to hit the like button if you are finding the content useful, and much more importantly, share this content with your friends, colleagues in your Slack trading groups, WhatsApp trading groups, or Discord trading groups, whatever you are using, so that we get more and more reach. Lastly, those of you who have been following me for some time and would like to become part of the membership group, our Slack private group is accessible. I post my trades here as I discussed earlier in the crude oil section and my analysis as well. So you can request details by heading over to the contact us page 50is.com/contact us and requesting details using the subject matter request details for Slack private group. So that's about it for this discussion. I hope you found it beneficial, and I hope to see you in the next webinar, guys. Thank you and take care.